Action.
Pop quiz!
If you invested $100 in the stock market in 1926, it would now be worth A, $101, B, $201, C, $100,000, D, $500,000, E, $10 million, F, undefined, G, none of the above, H, all of the above, or I, $201.97.
If you don't know the answer, don't worry, because soon enough, you will. Today I'm going to show you why
You should invest in the economy, and if you don't, you'll wanna be. I'm telling you this honestly, your money's gonna grow. And if you don't, you'll lose your stash. Inflation will consume your cash. You're throwing money in the trash. It's a guarantee, you know.
learning how to invest your money is the best and easiest investment that you could make with your time. But you have to do it early. To demonstrate why, I made a graph to show what would have happened if you had invested only $100 in the stock market 90 years ago. Now, after 90 years, you'll definitely be dead. But while we're going through this, I want you to just imagine how rich you could have been if you had invested for 90 years and didn't die. Even though you will. Some of you much sooner than others. So let's not waste any time. If you'll come look at my laptop screen, you'll see this chart mapping bull and bear markets from 1926 to 2016. Basically, bull markets are when the economy is doing well. You'll probably hear people saying things like, "Wow, I can't believe how much money I have." And in a bear market, when the economy isn't doing well, you might hear people saying things like, "Gosh darn it, I can barely afford to feed my family." So that's why they call them bull and bear markets. Anyways, based on that chart, I created this graph here, supposing you start with $100 in 1926. We gain a bit, but then we hit the Great Depression and lose 80% of our wealth. That sucks. But it's okay. We sit tight and get up to $445 near 1950. So we've made 450% in 25 years. Not great, but hey, next 15 years we go up another 900% on our already quadrupled money. Once we're in 1972, almost 50 years ahead, we have 48 times our initial investment. Over the next 10 years, it fluctuates up and down, but then we're at the 1980s, and Ronald Reagan, America's favorite president, gets elected, and the economy doubles a few times again. Now we're at 1990 with $46,000. Then, bam! That same year we hit a recession and lose 30%, back to $32,000. Aww. Finally, our last 25 years. In the 1990s, the economy is booming. Internet is becoming widespread, the dot-com boom. I was born. Lots of big things happening here. Then we go up and down a bit. The big 2008 housing crisis happens. And here we find ourselves at $477,000 in 2015. As our society evolves, we continue to become more productive, more efficient, with more innovative ideas for how to do things. So our economy is becoming more valuable. While individual companies may rise and fall, you can bet that the overall value of the market is going to rise. However, the market goes through some serious fluctuations. Do not put any money into the market that you are not mentally prepared to lose. The sooner you start investing, the earlier you can take advantage of compounding, which basically means that first your money gets interest, but then your interest gets interest, and then your interesting. So go invest some money today, and don't forget to check on it before you die.